we slowly but surely encourage them to use the platform more and more for their financial operations. And the first thing that we try to engage them with is that if you start using this, your financial transactions are already documented. In future, you don't even need to upload those PDF documents anymore, because your profile is already being improved. If they have used the product, let's say X number of times, or have created invoices amounting to X amount, this user obviously is going to be using it for a recurring period of time. What a marketer focused on user acquisition will do in terms of market research and directly talking to the user, somewhere retention marketers are falling short of that.
User engagement and retention is a crucial but least understood aspect of growing a successful business. We are here to change that. Hi, this is Ankur. Join me as I dive into conversation with the best and brightest minds in user engagement to help you navigate the why, what, and how of this subject.
Hello and welcome to one more episode of State of Retention Marketing. This is your host Ankur, and today we're in conversation with Nandini Chandra. She's been a growth professional for several years now, currently leading the charter for retention and growth at CredAble. And she's a fabulous conversationalist. She's been a content background person, and I'm quite excited to understand her journey. So Nandini, thank you for doing this. Thank you for being here. And let's just maybe give a little bit of introduction about your own journey from where you've been and how you're here.
Okay, first of all, thank you so much for having me. Okay, so my journey, right? I know that you're interested in terms of my content background, but here's the fun part. I actually studied filmmaking during my post-graduation. So from filmmaking, right now I'm a growth marketer. Yeah, the journey has been interesting to say the least, but fulfilling somewhere down the line. So how it all started is I graduated, and then I realized Bollywood is just not for me. And then I started looking out for jobs. It also happened to be the time when startups were gaining momentum in India, right? So a lot of opportunities for content writers or content professionals as such. And that's how I landed up my first job as a content associate. Now, that's the fun part about startups. You get to learn everything. Whether you want it or not, that's a different thing.
Sure.
But you are thrown into everything as such. And I was a content writer. From there, they immediately decided that I would be in charge of creating the entire blog and getting leads from that. It was an hectic startup. So from there, I started understanding how organic marketing works and how do you build a content cycle which revolves and gets users interested, and in that entire awareness, consideration, decision making, the three basic stages of content marketing, etc., etc. And then again, because it was a very small team and people were friendly, that's very important, I also got to learn the digital marketing side of it, like how the ads are run. So fun fact, I remember when the social media marketing was happening, again, pretty new at that time. This would be around 2012, 13 or something. The Facebook dashboard, Facebook ads dashboard, what it was then and what it is now, my God. Like,
of course.
It's, and every day I log in, every day it's a different dashboard. So that's how quick things are changing, right? But going back to my journey, so what happened was then I moved and I briefly worked with Ink42. I was a freelancer. I was responsible for all the startup related stories and all. So I think at that point of time, I became pretty enchanted with the entire startup ecosystem and how things are, and that at that point of time, entrepreneurs or entrepreneurship was pretty much a novelty, right? You want to do something, you want to disrupt, you want to change the world.
Sure.
And of course, I didn't have a life-changing idea, but I wanted to be a part of it.
Sure.
So I thought I will be working with a startup, and Ink42 working with in Quarter 2 gave me that opportunity
Exposure to a lot
to,
of startups.
oh yes, and interacting with founders, etc., etc.
Hmm.
But somewhere I also felt a bit limited because I would hear the new things that the founders are trying or their teams are trying, and I'm somewhere just writing about it. I was not
Sure.
happy with it, right?
Hmm.
So I wanted to explore, and
Get in
thankfully,
the ring in some sense. You're still
Yeah.
witnessing outside the ring, but you want to get in the ring
yeah,
now.
I want to participate. I don't just want to be an observer.
Sure.
So I started looking out. Again, ended up getting a job as the first marketing person in a travel tech startup.
Okay.
B2B travel tech startup. So
Okay.
not very exciting.
Sure.
But at the same time, it also gave me the opportunity to learn a lot about from 0 to 1 how things are built, not just the product aspect of it, but how do you make, or rather, how do you start your marketing? How do you make your name out there? And how do you retain that?
Fair enough.
Right? If I'm being honest, like your day-to-day activities and such things, you don't really think about all of this. You don't really get the luxury of thinking about the bigger picture.
Sure.
But now in hindsight, I realize that's exactly what I have been doing, right?
Sure.
So that's what had happened. And from then on, it's just been an uphill journey. I think somewhere down the line, I was at the right places at the right time. And in 2017, I joined a fintech startup. And since then, I think I've been working only in fintech, and there is just something, infectiously positive about this space right now, which I do not want to leave. So since then, I have been working with fintechs. I've been working with my first journey was with a Singapore-based wealth management platform. That's also the time when I started to learn about AI, or the AI bit was becoming important. Then I happened to work with India's 100th unicorn as well. It's a digital neobank for SMEs.
Sure.
And right now I'm working with CredAble. It's India's largest working capital platform, B2B space. But the very interesting thing about my job at CredAble is when I joined it about almost a year and a half back, they launched a brand new product. So I was hired specifically to look after the product growth of it. And mind you, my role right before that was content marketing and content strategy. From there to product growth and exclusively looking at user acquisition and then, of course, retention. This is something, sometimes when I think back, sometimes when I reflect, I also don't realize how exactly it happened.
Sure.
But it happened.
You're able to connect the dots looking backwards somewhat, because normally to have content folks go into the brand side of things is relatively more common.
Right.
But I'm actually quite curious to figure out what were the key milestones in your journey which you thought were making you switch towards this side of the story. Are you able to now look back and say, okay, this is one point where I made a meaningful shift, and this is a second meaningful shift, and now I'm like completely on the other side of the table?
So I think the first meaningful shift for me happened when I joined the first fintech company that was there. The reason I'm saying this is not just because it introduced me to the fintech movement overall, but also at the very same time, I was dealing with 3 very different markets. We had presence in Hong Kong, we had presence in Singapore. It was a Singapore headquartered company. And of course, we had a very strong presence in India. And very quickly, I figured out that how the user, or at the end of the day, the customers behave, very, very different. You would expect a certain level of sophistication for your Singapore or Hong Kong based users. For India, it was about trust and the value for money. And I know it sounds like a little bit of a cliche when you say that the Indian mindset, they're always looking for something that is worth the buck. It's absolutely true. And if I look at myself as a consumer, right, like why do you think online platforms or e-commerce so much they have done so well? Simply because they are somewhere down the line giving us, or at least making us think that they are giving us value for money. And that's I think, going back to the discussion that we were having, I think that was the most meaningful shift, because there, it forced me to think that not one user is the same. Of course, they are not, but even more than that, it helped me understand the different nuances. And instead of just, running some blanket or umbrella campaigns, then I was forced to look at how do I reach to this particular set of people.
Sure.
And I would also say that that was also the very same time when I started to realize that I need to understand the journey. Again, pretty much on my own, and I would probably not have, of course, I knew about it, but I would probably not have understood the funnels, different stages of the funnel, how they move, what do you do in terms of, nudging them, pushing them to make certain actions, etc. But that's how it became, and it forced me to learn. Never been a fan of spreadsheets or Excel files, and now, funny thing, you open my laptop and there's
all you will find is Excel sheets and dashboards, right? That's the
Yeah.
reality of a growth marketer.
Yeah.
Very interesting switch. So that's the first point where the exposure to the Singapore-based fin is where your big switch from content, pure content, to now segments and funnels and understanding that side. Is there a second big step involved?
Yes, that would be CredAble.
Okay.
So, so my transition from the Singapore-based company to Open was pretty smooth. And Open gave me a lot of opportunity to experiment with content. It also gave me that little bit of experience in terms of working directly with the product folks.
Sure.
Because I was exclusively working for the retention segment, right?
Hmm.
And then I joined CredAble, and like I said, it was about starting everything from scratch for the product that they were building. And there, not just that, we needed user acquisition, but we needed aggressive growth. Also needed to understand if I'm getting the value from the money I'm spending. And that's where you kind of have to. So this is the scary part, right? A lot of folks don't realize this, but as a digital advertiser, I wouldn't exactly call it marketing. I will call it strictly advertising. You are spending money, and it is not your money. It is everyone's money. So you need to be very careful about what you're doing. Like we were having this discussion, and you rightly said that everybody knows Google and Facebook, and everybody knows how to scale. But that's exactly the fact. Your competitors are already there. If you're not doing it, they will do it. How do you tackle it? What are the other channels do you have? If you can make, I think it's all about finding that right balance and the right combination of digital, if you have the luxury of having an offline presence as well, depending on the business, of course. That's the thing. You need to find that sweet spot, and you need to hit hard. You need to hit it every day. You need to be consistent, and voila. That's when, it happens.
Yeah. Several years later, an overnight success is born, right?
Yeah, several years later. That's the thing.
Awesome. So, let's just zoom in a little bit on the parts where you looked at retention and product-led growth at Open, and now you're looking at the same plus a lot more of topics with CredAble as well. So as far as understanding the team structures, what kind of people need to come together to make this happen, what was the org design like? Is this a growth team which has engineers, product managers, content marketers and everything, or how is this organized?
If I am involved in the growth team, and if my product is just starting up, day zero, in fact, there, depending on the business goals that the founders and the senior management has decided, I need an X number of users to come in. Now, my job as a growth manager or a growth leader is to get those many users with, of course, the minimum money that I can spend, or using my money, spending my money in the most intelligent way, in the more smart way. That's the goal I have. But when I have those X set of users, what do? I'm not here to create just a random database of users. I am here to get relevant users who are going to use the product. And that's where everything in terms of the long journey of the business will happen. Then my role changes. When I say role, I mean my KPI or my responsibilities, they change. Then my focus is, of course, I'm getting my users, and with all the advertising, especially the digital advertising channels you have, it kind of is automated in the sense that you are giving the signal back to the platforms that these are the kind of users I want, etc., etc. More or less on autopilot. That's when the real challenge begins. You have these many users. What do you do with them?
I'm going to delve a little deeper into this aspect of the kind of users you want bit of it, right? Because typically a lot of growth across the last few years, especially in the fintech ecosystem, several others, right? Tech also in that sense, has always happened on very aggressive acquisition-led growth.
Correct.
But then that's where the quality of the users are getting in and the kind of subsequent lifetime value they'll have has somehow getting compromised.
Correct.
So the question for you there would be that when you say that this is the kind of users you want, from all the, and this is a web-first platform as I understand, you have a bunch of people who are filling up forms and then they go into a certain process flow. So the guy who's just come into your platform for the first time would have a KYC cycle to go through, some amount of onboarding work to be done. So whatever the metrics that you decide, okay, this is the set of metrics that define what a good quality user is. And then this is what I want to ramp up, because there are channels which are giving me a lot of users, but they're not the greatest quality. So I will not really scale up those channels. So how do you look at this? What are the metrics that decide what a good user is? And then how do you feed it back to your campaign setup to now optimize for the right kind of users?
See, one is, of course, the straightforward answer for this, I believe, would be you give the right signal to the ad platforms that if a user has come and from point A to point B, that person has come, done this particular action, I want that kind of a user.
Are you able to tell us in more detail as to what those actions look like in your industry?
Unfortunately,
in your industry?
Industry, yes, probably not very specifically, but okay, let's say in the lending space, what usually happens, like you rightly said, a person has to come, they have to fill in their KYC or whatever other details they need to fill in, and of course, provide their financials, right? Because you are...
Upload a set of documents?
Yes, uploading documents, let's call it that. And again, depending from company to company, more or less, but this is the gradual process. So, you would want that one user comes and one user does all of these actions and uploads the document, and you send the signal back to the platforms that, this is, I want...
This is the guy who's completed his onboarding, so to speak.
Yeah,
so to put that as a journey step.
Correct. Yeah. A user who has completed their onboarding journey, I want these kind of users who are likely to finish this action. Right? So this is one way of
optimization on all the digital marketing efforts would be not to just pure play form fills, but all the way till onboarding completion.
Correct.
Right? That's the signal you give back to whatever platform you're working with, and that's what they optimize the scale for.
Correct.
And when you look at a concept around customer acquisition costs and how you optimize for those, is this going to be the cost of a onboarded customer, or is this the cost of a form filled?
So the example I have given you, it is specific for lending.
Sure.
Right.
So talking about lending and SME banking, I'm going to stay within that space.
No, but that's the thing, right? If you are talking about lending, I have told you that they need to perform certain actions in terms of completing their certain applications or whatever, right? Depending, of course,
so there
on the platform.
KYC to be done, there's a form to be filled up, and there's a document to be uploaded, usually a bunch of them. And then there'll be either a loan given, not given, rates accepted, not accepted.
And then depends on the platform, whatever happens. But from the user's end, this is the minimum number of actions they need to take.
Must take.
When it comes to banking or digital banking, you generally don't need to do any of that. You just need to provide your contact details and voila, you have a digital account, right?
Oh, well, we had a conversation with somebody from Jupiter fairly recently, and the point there was, I need to get this guy to load some money into his account. Once he's put the money into his account, then there are probably things he can invest in, he can make payments, he can do a bunch of things. But that's where their definition of activated is also somewhat more specific, that okay, if he's not done this, then he's not called activated yet. And that's what I was trying to zoom into with you, that at what point do you consider the user as, let's say, onboarded or activated?
Exactly. So again, lending, I think it's pretty clear. But again, like you rightly said, for a banking user, I've just signed up. I have not done anything. What do I do?
Doesn't count, no?
Exactly. That doesn't count. So what do you have? And this is exactly where the growth team comes in.
Sure.
Right? Of course, the product team has built a great product, no doubt about it. And it has all the features. One very important thing, this is exactly where the growth team's work starts, is that you have a product brilliant. You have a user even better. How do you make the user do certain things?
Sure.
You can do it with a lot of, like, there are multiple practices, of course. Yes, of course. So you can do a walkthrough video. You have those pop-up clouds. You give them a certain feature like, try this, something like that. Usually what the fintech companies do, and I'm mostly talking about neobanking companies, is that they have the credit facility. That's the game changer, so-called, for all of fintech, be it B2C, be it B2B, everybody is pushing the credit angle. So you get X amount of credit, you get like coins, monies, whatever. You do this and you get
it's a
this
monetary incentive of some sort.
Exactly. But
when you're saying credit, you mean monetary incentives to kind of do a certain action. You get, let's say, whatever, 100 points or 100 coins for doing one particular step. Okay.
Exactly. Because think about it. You are competing with not just other fintech. You are competing with 100 years old, probably more than that,
Traditional
banking system.
banking
How do
system,
you
of course.
compete until unless you you have to give them something.
Sure.
Why else will they come onto your app?
Absolutely.
And that's exactly what the growth team does now. But the challenge now here is that everybody has figured that out. Everybody has figured that out.
Sure.
So what do they do? Like, how do you make sure that you come to my app, you do these kind of actions, and you understand the worth that my coins or my points or whatever that I'm giving out, it will help you more than whatever other points you are getting from other platforms.
But that becomes very, in some sense, tactical and transactional in nature, no?
It is, but
that's the reality of it.
That's the reality of it.
So what we're saying in effect is to steer the user's behavior in a certain direction, to complete a set of actions, and then perhaps to complete the business goal that you have and kind of what they have also. Ultimately, it's about them requiring a loan, requesting a loan, getting a loan, paying it back and paying the interest they're supposed to pay, and that's how the business cycle completes.
Absolutely.
Once you finish one loan repayment, you want them to take another loan, and so on and so forth. That's kind of how the journey would go. The size of the loan will grow ideally, right? So that guy would maybe able to access a better loan rate because he's now got some history to it. So let's just go through this journey to a certain extent in the lending ecosystem itself. It's an SME involved. So this is not insane amount of consumer scale that typically some of these consumer companies might see. So we also had a conversation with somebody from Pay with Ring, if you've seen them. So they have a consumer lending play, right?
Yeah.
And their entire underwriting is automated. So in a matter of 10 seconds, you can get a 1,000 rupee, 800 rupee loan. They'll do whatever they have to do from a digital play. I'm assuming your process is slightly more tedious than that because the amount of money involved as well as the kind of documents involved are slightly different and probably more complicated. So in terms of turnaround times, when I, let's say, onboard with the CredAble application as an SME, what kind of typical cycles do you see that, okay, from this point to the time that he sees application submitted successfully to the loan approved, or this is the value, this is the interest rate, what is the typical cycle here?
So, in terms of a loan application for a business owner, we have tried to keep it as simple as possible. They have to fill in their contact details and basic business details such as the business name, of course, the GST number, etc.
Sure.
Done. Then they will have to check and then add their CIBIL score. Again, absolutely done via the platform, nothing they need to fetch from other platforms. So it's there. And they have to also upload their bank statements. Again, uploading document section. That's it. From a user point of view, these are the minimum number of actions they need to do. Now what happens is that similar to any other lending platform, we also have our own engine running our algorithms, and of course we have our underwriting system as well. Now the beauty of the underwriting program that we have created is that, of course, we don't have one lending partner. We have multiple. And depending on the partner, depending on in terms of geographic location where the partner is comfortable, or let's say depending on the duration, tenure of the business, depending on the revenue of the business, depending on the industry of the business, they have different types of lending products itself. Now, what has happened is that we have been able to build a underwriting program which not only, forwards the application to lenders, it finds the right lender and lending product match. That is the keyword. It's not just the lender, the lending product that you have.
Once you've submitted the documents, you end up probably with multiple offers from multiple lenders.
I wouldn't say that. What the platform will help you in terms of finding the right lending product, because within business loan, there are gamut of options, right? So for your business, for the amount of money that you're looking for, and given, of course, your partners, their financial background, your business's financial background, you are given the options of the right lending product first, coming from the right.
First.
Yes,
and
product always
lender
comes first. Yes, and the right lender, the best possible lender. If that doesn't work out for various reasons, a lot of times even the borrower might not be comfortable with the terms and all. You have the second best possible option, right?
So sorry, a few things. One is in terms of the journey from the point where the documents have been submitted to the first time a possible product is being shown. Given that there are partners involved, is this process also including an underwriter from the partner ecosystem to formulate the kind of product that will be provided to this person in terms of pricing and rates?
So no, that entire process is automated. So what usually happens once the loan application is done, and this is a mandated way of operating
Sure.
in the lending space,
It's
is
also
that
regulated, right?
yeah, that's
Several
the thing.
ways.
That's the thing. So there has to be a manual intervention. So the application is forwarded. We already know the right lender and the lending product. Of course, the lender themselves know that. Then it is mandatory that the lender will reach out to the borrower. Of course, verify the
Okay.
documents, and a verbal offer is communicated.
But this is on a phone call.
This has to happen. It has to
Okay.
be verified offline.
Okay.
There's no other way.
It's a regulatory requirement
Yeah.
to do that.
On
Okay.
if you're talking about what the user sees on the platform, it's pretty much like your loan application is under process, you'll be contacted, blah blah blah. And this
Okay.
is also where I may point out that multiple online communication will also be
Given
shared
confidence
with
that
the
something is happening, it's not like you're waiting for nothing.
exactly. It's
Huh.
not like out of the blank. You
Sure.
are already in touch, but the final conversation that kind of seals it has to happen offline, and that's again
That's a
regulatory.
regulatory ask, and you have to follow that through. So basically, after the person is filled up, you have a set of offers. Would multiple banks or lenders contact the person at the same time
No,
when he accepts
so this
something?
is the thing, right? It's not really fair on us or our lending partners as like 2-3 people
To
together.
compete for it.
Exactly.
This guy.
It's not. I mean, nobody will sign
You're
up
not
for
setting
it.
up a marketplace here in some sense. What is the decision criteria on
So I
what gets
think
shown to whom?
I think what you can describe us as, or the right terminology for us will be LSPs, loan services providers.
Sure.
So in terms of our operations, we probably are an aggregator, but that's the thing. We are also helping the lenders in terms of understanding the financial background and help them process it that much faster. So when I
Okay.
said that the lender and the right lending product is being chosen, so the lender also knows that this particular business, because for us it's a business, is more suitable for this particular type of product versus something else.
Are you saying this is because you're abstracting all the relevant information from the data that you've uploaded, the CIBIL score that you have, the bank statement that you have? You will process it in a certain fashion before fast forwarding it to the lender, and he'll be able to take a more informed decision on the basis of the information you provided. Okay?
Exactly. So that's the thing, right? Like the whole point of doing it digitally is that you have so much of information, and what really happens when all of this is being done manually, and no offense to anyone, the credit risk folks that are there in the banks, they're brilliant people, right?
Sure, but
At the end of the day, they are prone to manual errors.
Of course.
You are processing so much.
Besides also a speed thing, it's also a velocity thing, it's also a quality of decision making at certain level of fatigue, right?
And the thing is, and this is something I guess if you ask anyone in the lending space, there's a nuance of subjectivity there. So as a person, I might feel that probably this is not a good case. This is not a hot lead because, something like that gut instinct, whatever. But when you have processed X number of years of transactions, in other words, the machine can't be wrong. So that's what. And it also helps the lender to process those many of loans rather than, relying on manual number of hours and then, being a bit slow.
So you end up making the loan processing / product offering a lot more efficient in some sense because of the amount of data you're providing. But this is happening sequentially, or is this happening parallel with multiple lenders?
This is happening parallelly with multiple lenders.
So for one applicant, let's say I were to be an SME who's applying for a loan with CredAble, my application will be processed by multiple lenders. What will come back to me is a possible set of different alternates. That's what it'll boil down to. And I get to choose which one works for me in terms of
of course.
whatever pricing and tenure and terms
are. As a borrower, this is your right to have all the information. Choices and all the information related to those choices.
Each choice will have its own
Exactly. Sure. So, and that's what I also meant when I said, like, whenever a loan is sanctioned, does not mean, or rather approved, does not mean that it will be sanctioned because there might be a reject from the borrower.
Itself.
Exactly.
So now what has happened is, basis my application, I have a bunch of possible alternates. You can call it offers perhaps in some sense.
You can.
And then I can choose to confirm acceptance of an offer, which is what has to happen verbally.
Right.
And then the sanction happens and the money would get to wherever it has to get to.
Digital disbursement, basically wired to the bank.
This is as far as the journey of borrowing is concerned.
Right.
Within this journey, there might be, let's say, stalling points where the guy is
There
taking
will
longer
be.
than he is supposed to take, or
There will be.
then there are set of nudges involved where you will want to bring him back into the conversation.
Right.
Help us understand a little bit where the engagement pieces, where you understand this funnel, you understand the leakage points and drop-offs at various parts of this funnel, and you have to make interventions to make sure that the maximum recovery happens, right? So instead of, let's say, having 100 people who've applied for a loan and only X number of people who've sanctioned one, how do you expand this part? Because that's essentially your business KPI.
Right. So one quick thing, in the lending space, what usually happens, even if everything goes smoothly, right, because we do require certain documents to be uploaded, it's not necessary that the user will have those documents handy.
Sure.
Very honestly,
which
that's
is a structural
the first
problem which you can't solve for. If he doesn't have the document, if he doesn't have the PAN card, you can't do anything.
I can't do anything. Nobody can do anything. And you ask anyone in the lending space, that's where the first major drop-off happens.
But tell me something very, very fundamentally. Typically, each of the borrowers are either in aggressive need of a loan, and then they're like shopping around at all possible options. And there are general mindsets that these guys are the hardest to get to, vis-a-vis these guys are the easiest to get to. Of course, the pricing is inverted, right? So a public sector bank would probably be the cheapest, but it's also the hardest one to get across. And then there are all of these NBFCs and cooperatives and all of that, which are easier to get loans from, but then they need to be more expensive. Simply because the risk profiling is kind of different. The pricing is a little different. Which end of the spectrum do you currently operate on?
Both.
You do. So from a choice of customer perspective, you don't mind working with somebody who wants a really well-priced loan because you have that supply as well.
So, see, this is where I think we have done really well in terms of partnering with the right kind of lenders. And when I say right kind of lenders, I mean we have lenders from the entirety of the spectrum.
To put it in very simple terms, if somebody wants a very well-priced loan, if he has the books for it, he'll get it on your platform.
Exactly.
Safe to say that?
Exactly.
So you don't have to be a desperate guy to accept an 18% rate. That's only one part of your play. The larger part of your play might just be that this guy is really good, but he would rather have one person kind of look at everything and then give him all the options than go to have files placed at different banks.
Exactly.
So the offering essentially being simplifying the journey of getting a loan than the price itself. Is that a safe place to say?
So that of course is one part of it. The other one is also helping them understand the different options that they have.
Sure.
So just to give you a very simple example, one will be, see, when we talk about business loans, we usually think, although a lot of us may not know the terminology here, but we usually think of the term loans. Basically, you borrow a certain amount of money from the lender, you pay it over a year, 2 years, whatever is the agreement, EMIs and all. There is also something called, and this is very, very simple, bill discounting.
Part of working capital itself, you have an invoice with a reputed company.
Yeah, exactly.
Huh.
But you would be surprised to learn that how many businesses still don't know what that is.
Really? Okay.
Yeah. I mean, a lot of you do not think about
which is the great, interesting consumer insights or customer insight side of India, Bharat, tier 2 cities and all. I would love to zoom into this, but go on.
So that's the thing, like you and I, we are sitting over here, we probably know about bill discounting because we have come across this, we have spoken to our finance team or whatever, we know that what it is. Imagine a person who is sitting out of Hosur running his own factory, pretty successful. And to a certain extent, of course, he will be required of working capital to provide for his business and all. Where do you think he will go? He will go to his own network first, right?
Which is usually expensive, 2% a month kind of informal loans.
Exactly. That's the first place that person will go.
Very interesting. So help me zoom into this in terms of how CredAble is positioned and the nature of borrowers you're working with. Is there a pattern to tier 2, tier 1 size of business? What would be an ICP for you?
So for me, the ICP, see, again, you need to understand we are still in our learning phase and pretty much year 1 we have completed. So the most amount of success we have seen is from tier 1. And Bombay, Delhi, Bangalore, these 3 being the most successful cities as of
Sure.
now. But that's also because the digital penetration itself is high. And you might think of it as superfluous, but that's exactly what happens. It's because of my digital reach in terms of my advertising, I am getting users from all over India.
Sure.
But you would be surprised how many times our operations team have reached out to a customer, or we have received a call that they're unable to upload the document simply because the network is bad.
Okay. And that's the reality of a bunch
That's
of
the
places
reality
as well.
of
Sure.
So,
And what would be the typical size of these businesses in terms of, let's say, their turnovers, since you have that data?
So I think it would be somewhere between 30 to 50 lakhs annual.
Annual. So
Yeah,
that's typically a small
Yeah.
business which
Yeah.
has 5 or whatever 10 employees.
So it can be like a small mom and pop grocery store.
Sure.
It can be a retailer. It can be wholesalers, traders. Like obviously,
But
there's
then,
no dearth of business.
when you ask for their P&Ls and their balance sheets, their IT returns as
Yeah.
part of your KYC, that's your criteria of how to judge whether this is worth giving a loan or not. Do these guys have well-maintained books to begin with?
So that's where we have kind of figured out an alternative solution, and to a certain extent, it has worked for us.
Okay.
So a lot of these folks, they work on Tally, or rather, their accountants work on Tally, and we have a Tally connector.
Okay.
So what we
You'll absorb the data from Tally and then you can do whatever you want with it.
we just have to help that person to connect their Tally, and the way we have tried to deal with it is, there are some, and you would be surprised to know how digitally educated or digitally literate some of these people are. Very, very smart, and you just have to give them a small video clip or just step-by-step process. They will do it all on their own. Some may require additional help, but then again, that's how you as a product, you need to be approachable. If they reach out to us via various
It's going to
means.
be a growth journey. At all points of time, you'll not get the savviest bunch. But okay, interesting. But so what you're saying in effect is your acquisition you mentioned was by and large digital at this point.
Yeah.
So people who are looking for loans, they would search for something, they'll discover CredAble, they'll come onto the platform, they'll figure, okay, I need to connect my Tally. That's how they pull all of their data. And they're not very touchy about sharing this data with you because they want the loan.
Yeah.
So once they connect their Tally, you have all of their data put together, joining with their CIBIL. Now you have a profile to send to their lender. The lender now makes an offer based on what he sees. And now what happens from a user journey perspective?
So the confirmation comes from us only, because obviously the user on their profile, they will get to see that loan has been sanctioned and disbursed. So the
disbursed. So it's actually going to get sent to his bank account directly without much ado. Okay.
No hassles. So pretty straightforward. They will be communicated time to time. So again, it's pretty automated. It's pretty much set up that once the disbursement is done, the user of course needs to send in a receipt. I have received the money, like a
confirmation.
Confirmation, and then time to time, like
happens
then the
how
monthly.
And where? Where would this confirmation be? I mean, is there a
Email.
button he's pressing? He's sending an email.
Yeah. He has to send,
But
like it's an auto email.
Regulatory? You're sending a confirmation email, but him replying to it is also via email itself. Is that also regulatory? Because otherwise, to translate that email confirmation into a systematic thing at scale that you're talking about could be a little messy, no?
So honestly speaking, the regulation is keep everything documented. So that is the most sure-shot way of doing it. But the good thing is, it's a very basic auto-reply thing that we have, right? So, here, like I mentioned, we do have to have that sort of manual intervention as well, because once it is disbursed, right, our operations team immediately calls and reminds them, please send the email.
Confirm this email, okay?
Yeah.
Super. So, we understood a little bit about the profile of the kind of people that are coming to you, the size of their businesses, typically from where they are. Any indicative sense on what kind of typical loan durations these are, what kind of loan sizes these are? And at this point, it's still early, it's just been 1 year, so I don't know if delinquencies are already there, but early signs on any of those metrics?
So, see, one thing in terms of the tenure, right? All the term loans that are disbursed on the platform, the duration is for a year, 12 months. That is the product that we are selling.
That's the by design kind of
by
product.
Design, yes. That is we wanted it to be for 12 months only and not more than that. That's one. Second, in terms of the loan ticket size, if I can call it that, so that's usually between 15 to 20 lakhs for a term loan.
Okay.
Of course, it goes lower than that, it goes higher than that, but as of now, again, been a year. For the last 3 months, this is the trend that we are seeing.
Got it. So now, would the guy be able to take a second loan before his first loan's over? Can he prepay and take a second loan? How does the life cycle look like?
So usually what happens in these kind of spectrums, you may have an options to top up.
Sure.
But at the very same time, that is entirely up to the lending partner. That is at their own discretion, and if they want to, let's say, extend the tenure or they want to top the loan amount up, that is up to them. Of course, on the platform itself, they just need to update the information accordingly. But we have put certain, the product is built in that way from the lender's point of view also, that this kind of modifications can be done. But like I said, this is not the usual practice. And between you and me, this is not something that anybody would prefer doing, either from a borrower's end or from a lender's point of view.
Okay. So it's not the big use case. So, the reason I'm asking that question is from a retention and life cycle and lifetime value perspective. You've given out a loan. Is the repayment happening through your platform in some fashion? Do you facilitate that, whatever, charging the account or what do you call them? Standing instructions of some sort?
So for the lending space, right, again, what usually happens, or the repayment that happens, is via an escrow account.
Okay.
So that's how everything is done. In terms of the life cycle bit, like I told you, if you're talking about a term loan, right, again, loan is a very, ideally, in a very good scenario, it is a one-time use case, or hopefully you need a loan now and you don't need to have it. If it's a
working capital, you can keep kind of doing whatever scale up.
So this is where term loans are not very favorable. This is where bill discounting comes into place, where there is a cycle that is happening.
Complete the term loan wala exercise for a moment, and then we'll get to the other products, because what I'm trying to understand and zoom into is from a customer lifetime value optimization. Now, what are the levers that you have as a growth manager? Because he's taken a loan, and that has obviously been issued, granted. Structurally, you would have had some monetization value on top of this.
Yeah.
Now, he's repaying this loan over the next 12 months with maybe 12 EMIs. One, do you track or take care of the reminders and the nudges, the fact that he's repaid or not repaid this EMI? If he's not repaid, if it's aging in a certain fashion, then there are escalation paths to be handled. Maybe you want to make a phone call, but maybe you want to not make a phone call on the 31st day. You want to make a phone call on the 45th day. From 31st to 45th, you have a different model of engagement with this guy. And after 45th, if he's still not repaid, then there is another escalation path.
That is purely offline.
So that's where I was trying to zoom into that. Okay, as far as the recovery is concerned, there's a certain set of interventions to be made, which are by and large logical, but they're all running on the CredAble platform at this point, or does the lender do it independently?
No. We are involved, because at the end of the day, the borrower has come from our platform. And like you said, we do have our repayment cycle also pretty much planned. And that's the way it has been chalked out, keeping in mind certain borrower behaviors or what are the kind of risks that we are also taking, right?
Sure.
So it's pretty much like how you said. One thing I would like to point out is, at the very same time, what we have done from CredAble's end, by the way, the product from CredAble we are talking about is Upscale.
Sure.
So what we have done from this particular end is, we have not just kept it limited to lending. We have also kept it broad or open towards financial operations. Okay. So what happens is that, of course, a user has come onto the platform. They have got some money, and the repayment cycle is happening as and when. That is an independent function, right? What they can do is, in terms of financial operations, what we have tried to make it for that is, we have kept simple stuff like a bank account aggregator. We have kept an invoice management, a pretty advanced invoice management in place. So what usually happens...
Inbound, outbound, both? Invoice management for inbound invoices, outbound invoices, or both?
Both. I mean, everything is there. So how does it happen, and how do I help the user in terms of not only just using the platform more and more, but how do I make them understand that this is going to be their benefit? Just to give you a smaller example. So for example, a user has borrowed something, and see, in businesses, obviously, it's not that one time. There may be a time whenever you need to be. So for the repayment cycle, we have that place, and we have that communication is placed, that the on-timely repayment only helps in terms of building your credit profile, and in future, the more you expand, you can get it. What are the other things that we do? So before the user, whatever financial documents they would have provided, they also know that they had uploaded certain PDFs, etc., etc. what we ask them to do with the invoice management system that we have, with the banking aggregator that we have, the accounting automation modules that we have, we slowly but surely encourage them to use the platform more and more for their financial operations. And the first thing that we try to engage them with is that if you start using this, your financial transactions are already documented. In future, you don't even need to upload those PDF documents anymore, because your profile is already being improved and lender already has your
This is now
information.
via the Tally connector or more directly using your own software for those financial aspects?
No, this is purely
On the
our
product
software.
side.
Tally connector is just that
The
it
entry
fetches
point.
the information from Tally.
But you could do this ongoing as well, perhaps. But
It's parallel. It's not
Yeah,
like
so
if
it's still doing
somebody
the Tally
is doing
import.
our invoices, they can't, they can't use Tally. Tally, they will of course
They'll
need to
continue to
use,
use
right?
that.
Exactly. So, but that's the thing. Like the whole point of this particular exercise is to start off from one point. So let's say in our case, that would be the lending aspect of it. Start off from there. But how do I penetrate the entire aspect of a business's financial operations?
Interesting.
So, and it starts from there. For example, let me just give you a very quick example. We have a user who has gotten a loan from us.
One of your lenders.
Exactly. Like one of my lenders, basically an upscale user.
Sure.
Right. And of course, we have asked them, please connect your bank account on Upscale, because it will help you in terms of not only understanding the entire loan information, because of course you will get the updates there. You will also, it's easier for you to make the payment because you can just directly do it from there. And so what we do is like one of the examples I'm giving you, like so usually the repayment dates, whenever that is, 3 days prior to that, we send out an automated notification say your balance is low. If it is low, of course.
Okay.
But if it is low, your balance is low. You may want to top it up because your repayment is coming.
Sure.
I cannot tell you how successful that particular automation has done because of the fact that it is helpful. Now, mind you, what is my underlying motive here? If I look at the user's action over here, the user will probably see it, understand that they need to top up the account, they will do that and pay the. So, am I getting any benefit out of it?
Of course.
Not immediately.
Not instantly, but sure.
Not instantly. If they have this notification and month on month, they have come to rely on my platform more and more. That's my
trust.
ultimate goal. As a growth team and as part of the growth team, that's my ultimate goal, that my user needs to rely on me.
Sure, it becomes a habit. They're used to it. They know that if it's low,
If
they'll
they
be
know,
updated
so
by
again,
the
just
platform.
this one example, right? If they know that this platform helps me in terms of, they know that, my balance is low, so I will know, I don't have to, bother
kind
about
of
it.
sweat over it or constantly be conscious.
Now, for next, if I tell them that, why don't you try out my invoice feature, because not only it is autofilled with all your GST information that you will need, but once you start doing it, it will automatically fill in the rest of the invoice cycle as well, if it's a recurring this thing you need to do. Chances of that particular user using my other product is way higher than me advertising it digitally to like invoice management.
Getting deeper into the user's financial operations clearly, and that's become a well-navigated journey in some sense, because you've gotten him used to a certain set of nudges in some sense from your platform, which are actually helping him reduce the level of stress he's under for some of these data points, and that ultimately simplifying his life. That's the larger play, that you go deeper into his life, simplify his life, he starts to depend on you, the relationship goes further, and then he'll consume something or the other which will monetize for you.
I actually have an analogy over here. So, and this is again something that interestingly came to me last, I think 6 months ago. You have those relationship managers at the bank, right? And they on time, like at least on a month, they call you and they tell you that, how are you? Is everything okay and all? I realized that the nudges that we are sending pretty much doing the same thing.
Sure.
Of course, we are not asking them, how are you doing and all that. Although nothing is stopping us from, exactly. I mean, not in those sense, you know what I mean.
Directly, not yet.
But what I'm trying to say is that they are enabling us to maintain relationship with every single one of my customers.
Yeah.
And I cannot tell you how important that is, specifically in a fintech environment and specifically for a market in India where money and trust go hand in hand.
So you're saying your whole communication play ends up being a big contributor to trust building at a macro level, which is a strategic implication of whatever these technically small, tactical, but otherwise very meaningful things that you're doing.
Exactly, because see, if I go out and constantly start sending notifications or emails or whatever, like we have a new we have a new model, you please try it, you can try this, it will help you with this. After a point, people will get irritated.
Which is kind of where it's a little, unnerving for me to notice all the kind of blast messaging still happens across a lot of industries right now. Would I hear you say that a lot of your communication is very journey driven, a very user life stage, user situation with your business kind of driven? So if he's already had a happy moment or a happy experience with respect to his loan repayments, now he's slightly ripe for other engagement and other touch points. And that's where I was going to zoom into the whole lifetime value side of things, because ultimately you're a business who needs to monetize this user. Monetization opportunities would include either he takes multiple loans, maybe there is one term loan, there is other kinds of loan products that are available while he's still repaying his first one. How does this play look like? So the guy who's now crossed over from no relationship with you to having one loan which he's repaying, which is a term loan, let's say. Is that the biggest entry point for you for your play? Term loan is the biggest entry point. So now all the people who have a term loan, now they would expand their relationship in some fashion. What does that journey look like? How do you steer it? How do you navigate the nudges around it?
I'm going to cue back to the example that I have given. So for example, I'm trying to sell them my invoice module, right? One of the modules. Now, the way we have built it, it's pretty much like a SaaS platform. Right? So that's where the angle comes in, that if they have used the product, let's say X number of times, or have created invoices amounting to X amount, this user obviously is going to be using it for a recurring period of time. And that's where the SaaS angle...
It's very exciting to notice, there's a very clear parallel we drew with a bunch of other industries where you talk about the onboarding side of it, then there is an aha moment, then there's a habit formation stage, and there's a setup stage in between. So for instance, in Pinterest, if you've done, let's say, 5 pins, so your board will be populated. On Facebook, if you've added 7 friends in 10 days and your feed looks exciting, you're going to keep coming back to it. What you're saying is, if I've done, I'm just putting placeholders here, a set of invoices in there, let's say 3, 4, 5, what comes out of it is enough for you to now get excited to continue doing this.
Exactly.
In some sense, okay? And that's where a lot of your nudging / clearing will happen, that I need to get this user to this aha moment in some sense. What kind of milestones do you put to that kind of journey?
So I would say more, or rather instead of those aha moments, I need the user to be comfortable with my product. I'll tell you where it differs for a product like ours to any other consumer facing product. With any other consumer facing product, it's pretty much like, the novelty aspect of it, or the way you capture their attention. For a product like ours, and you can call it a good thing, you can call it a bad thing, it is about the level of comfort, the ease of comfort or convenience they have with a product like ours. If I go a step back, and if you look at the mobile banking apps from the traditional lenders or traditional banks rather, it took them a while to get users onboarded to the application. Why? Because the ease of comfort was not there.
There's trust to it, and there's the usability UX to it.
These are traditional banks, right? So on banks, people have trust. What they don't have trust on is the technology. When they had started.
That's a very interesting nuance, right? In some sense, ICICI is a great bank, but their app, am I comfortable mobile banking yet or not? That's
Wouldn't you rather just go, not maybe you, but let's say
my mother, of course, she'd much rather have a branch transaction and all of that stuff instead of dealing with the mobile app.
Exactly. You would rather have that face-to-face communication. But yeah, of course, our generation, and the generations after, we are more comfortable doing everything.
But in fact, not dealing with this customer, right? Your typical customer is actually that guy who's still distrusting of technology at some level.
Exactly. And that's how, right? That's where what I'm saying is that right now, the example that I gave you, it's pretty much like a digital journey, and our communication is also pretty digital. However, what we have also seen working, and this is where I would like to quote one small experiment, a very small
Sure.
experiment with just about 200 users we had done.
Hmm.
100 users, like two groups, 100, a very small segment. What we had done is, one is, of course, see, our nudges, our cycles, all of it is already set, and we've revisited whenever needed,
Sure.
all that jazz. Both sets are getting the same sort of communication. One set, we did manual interventions. So on day 45, one of our customer success team members, they reached out to them, and they just asked, like, again, like your
How are you doing?
relationship
Relationship
managers,
management.
how you are doing and all that. And they also asked, are you finding our platform to be useful? Do you think, it serves everything that you wanted, or, is everything discoverable for you?
Okay.
Right? That's the question we asked. We didn't ask that, what do you want?
Third one seems to be fairly interesting from a nuanced perspective, but okay, what came out of it?
What came out of it is that, apart from that one module, because of certain nudges that they would have used, they actually didn't realize that there were so many other features of the
Discoverability
product.
is an issue.
Exactly.
True, because it's also to do with what habit formation is, right? I mean, despite whatever WhatsApp has done in putting that little piece of rupee in front of your face, the adoption of WhatsApp Pay is still zilch. Simply because you just go to WhatsApp to send messages and pictures, but you do open a Google Pay to make payments.
Yeah.
So interesting, but then how do you solve for it? Because
short answer, we are still trying.
Of course.
We are still trying, but one of the ways we wanted to tackle this is, redesigning the homepage. And what we realized is that, how do I bring that customized user experience to a user?
Very interesting, because I am able to draw a fairly straight parallel with a bunch of other conversations I've been having, because what typically tends to happen is you have 10 different offerings to make. User might have preference for one or two, may not be for all 10. If you're going to show him all 10, chances that the attention is diffused and no action is taken, because choice paralysis happens and he's just going to blank out and move on to something that he's anyways inclined towards. And if you were to reduce the number of choices in front of him, chances that he'll take the next action are better.
Exactly.
So instead of showing him all 10, you show only the next two, which are the most likely ones, and then you kind of graduate him through the journey.
Exactly. Exactly. What also worked for us, however, was we wanted to try out, like, for example, if a user is, let's say, they haven't really understood the banking module. They have been using the invoicing, but they haven't really explored the banking module. What we did was, if the user is not activated, when they're creating the invoice, we just sent a small nudge saying, would you be collecting money from this bank account? Not connected, use this thing and you can get it directly here. That sort of a communication.
So very tactically timely nudge when he's doing something relevant.
Yeah.
And this is an automated thing which is triggered by the kind of action the user is taking on the platform. Obviously,
creating those triggers is hell. I wouldn't lie. Creating the logic.
Identify the right kind of trigger to make itself is the intellectually challenging part. Execution should be easy.
Execution is easy, but again, that identifying the pattern. Right?
Sure. And that's where all of your product analytics and the funnels come into picture, right? This is the multiple stages where this kind of nudges might make a difference.
And this is where I would say, and this is something that I haven't heard a lot of marketers who specifically focuses on retention do, or at least I haven't heard, is user behavior study. I'll tell you where. So what they will do is, of course, they will look at the graphs, they will look at the numbers, they will look at the charts, everything. But what a marketer focused on user acquisition will do in terms of market research and directly talking to the user, somewhere retention marketers are falling short of that. Interesting.
We did have this conversation right before we started the recording around the territory being more product, less marketing, or a combination of both. And that's the overlap/handshake place. And what you're describing right now is actually a product experience related nudge. So should this be executed and owned by the product junta, or should this be owned and executed by the marketing or retention teams? And that's where the boundaries can get a little blurry when the growth team gets involved. Now, the growth team is supposed to have minds and heads from both sides to actually make all of this happen. So what I hear you say is the subjective side of understanding user nuances are not as actively being pursued by the retention folks as they are by the acquisition folks?
Yeah.
Is there a structural reason to it, or is it more like a matter of time where people will start doing this?
I think it's a matter of time.
Yeah.
Because like you said, and see, what we have been focusing on pretty much as a market is aggressive user acquisition.
Of course.
Retention is now coming
Everyone's
into
problem.
picture. Exactly.
Yeah, but in your case, I mean, that's what it's going to come to, right? When you talk about lifetime value, and that's where the retention, cross-selling, upselling, all those components become interesting. You've given a loan, there is a certain level of fees that you might have made on this, but that's likely not going to cover your acquisition cost, which means you want him to either buy some of those SaaS
It's crucial
tools.
for me that they, at the end of the day, become a paid user for me.
Fair. So, which is where the SaaS tools you're talking about around invoice management, around other financial operations, are these paid tools?
Yes, they are.
Now we're talking. So, that's where the acquisition to all of these paid tools will become a very critical part of how your retention operation is actually playing out. Let's zoom into this. So, you mentioned that, okay, if you're doing a set of activities, let's say creating an invoice, you will want them to put the bank connector. I'm assuming there is a set of free things and then a certain set of paid things. And there's a typical user journey by which he'll start with these 3 free things, then he'll probably take one paid component, stay with it for some time, and then take the second paid component. So how does that journey look like?
So, for example, connecting all your bank accounts is absolutely free.
Free. I would imagine so. It's the stickiness quotient then.
Making payments also pretty much free. Collecting payments, you can collect it, but see, Upscale is not a bank. It's not a banking account. It's a digital account, right? So you also need to withdraw that money at some point in time, right? So to use that, I'm not saying collecting money. That's where we will charge you. If you want that feature to be enabled.
So is that like a payment link where somebody would send a link and then they would get paid and then so play out into the side, okay?
So in fact, if they have that feature enabled, our invoices go out with the payment link itself.
The link directly.
So it's all connected, but it can only be activated if you're a paid user.
Of course. So that's where the natural gravitation of a power user or somebody who's appreciating the value of the convenience that this is bringing to him will graduate to the paid product. And I'm assuming there are pricing models and there are ways to expose the user to that experience before probably charging. How do you navigate this? This is hardcore SaaS PLC in the middle of lending now.
Yeah.
Right? So a different ball game in some sense, a different hat that you now are wearing. And I'm actually intrigued that this is a dimension which is SME SaaS essentially in India, and your distribution becomes your lending product.
My distribution is by and large my lending product. No
so
two
you
ways
have like
about
a whole
it.
bunch of people taking loans from you, but that's not your end game. You're using only it as a way of getting them into the conversation. The game essentially is to give them SaaS tools which are empowering for them. Very interesting. Most people start the other way around.
I know, but this is where I also wanted to add. This is exactly where my experience as a content person comes in. I'll tell you why.
The dots connect well.
The dots connect well, surprisingly. But see, my user who I intend them to be more comfortable with the product and of course that ease of convenience. You also need to keep in mind that these are SMEs we are talking about. These are not startups.
Sure.
These are not so-called tech-savvy people. Of course, there are outliers. We discussed that.
Sure.
Right. That's where the dependency on reliable content and content that is easily consumable and content in which the language is that of the user becomes very, very important. And that's where, and this is the surprising or maybe expected but not realized soon enough thing, is that this is where the awareness and consideration happens. And that is a strong, strong content play.
Very interesting. So you're able to link the whole very clear user empathy side of the equation, understanding his needs, motivations, insecurities and concerns, and build that into your content play while you're building this messaging stack on top of an automated kind of system. So at different life stages, what are the things he's probably going to struggle with, and how do you comfort him, soothe him, make him build trust, and then play it out as a system? Okay. So now as far as the team structure is concerned, and you talk about yourself as a content person, also now turned into a marketer/growth leader. How does the team composition look like? What are the different people here doing? Because as I can imagine, there is a full-fledged play on getting the onboarding, KYC, loan part sorted. But now it's done for like, I don't know, 1 million odd users, maybe more. And now these are all ripe for the next part of the, let's say, squeezing value out of / delivering value to. Either of them, you can position it. But that's where the fun part now starts. And that's what would determine the truth of how successful the business ends up being.
Correct.
Right? So are there more loan products also involved here now? Because there was term loan
No,
which
no,
we
no.
spoke
There
about.
are more loan
There's
products. So
working
we
capital as
started
well, I'm
primarily
imagining.
with term loans, yes.
Huh.
But now we offer a gamut of lending products.
Sure.
So to be honest, because we are a product from CredAble, and CredAble has been in this game for the last 5 years, right? So CredAble in its own kitty has a lot of lending products in itself.
Sure.
So that's where we had that luxury of tapping into other lending products, and because of the existing partnerships, lenders were also more comfortable in terms of getting those lending
Integrated into
products
your
live
system.
on the platform.
So now, as far as the other products are concerned, they're typically, let's say, acquisition products where new customers come in for a working capital loan, or that still remains dominated by a term loan, and then everything else is a cross-sell in some sense.
To be honest, it's the second scenario over here. It's pretty much dominated by the term loan.
But that's the case so far. It might also be a function
Might
of how
also
your
change.
acquisition efforts are moving.
Yeah, so see, the thing is, in my honest opinion, I think we need to still give it at least one more year, because the users who had come in, now they're in that phase where they are, becoming more and more aware, and they are in that consideration phase of course, they are still, using it. But that's also is going to tell me whether something like this is going to become a lifelong habit, or something else can come up and completely disrupt.
Yeah,
And
it's
this
a
is
function
that.
of, what are the possible risks to this? Because I'm now thinking of from a habit formation perspective. You're simplifying a bunch of those things for me, aggregating my bank account, simplifying my invoicing, reminding me if I have low on balance. So a lot of the simplification is happening, which is the convenience side of things.
So I'll tell you what.
Should ideally be sticky.
The challenge here is the stickiness.
Correct.
And I'm also, unfortunately, my competition is not my other competitors. My competition is the mindset where in a market, any business owner can find anyone who is willing to do that tenuous job for, let's say, half the price. That's my challenge. I'll give you a simple example. Initially, when we tried to push the Tally connector on its own, a lot of these business owners came back to us saying that I already have a guy who does that for me. I don't care. So, like, initially we tried to, upend our game by saying that you get all the information on your WhatsApp and all. And I remember this one business owner, he was like, I already get that. This guy does it for me. He sends me on WhatsApp. How do I compete with that?
Sure.
Right? So that's the challenge. And in its own, or rather on its own, the financial operations bit, right? First of all, the stickiness or the loyalty, because when I'm saying matter of convenience, right? The fact that there is somebody else who is doing for you, you cannot beat that game of convenience.
Sure.
That's the reason why we armed it together with the lending product, because loan is something everybody needs. And here, if you have managed to get that idea into their head that if you start doing this, your profile is getting built up. So not just this particular loan, but in future, whenever you require a loan, it's just a button away, because now you don't even need to apply. You already have your profile, right? You just need to, just say that I need a loan. So that's the habit building formation that we are building.
Switch away from the offline current routes, which are not expensive because manpower is not expensive, to switching to tools which are online and savvy, and the appetite to pay for these things is still a question mark.
Yeah.
That would boil down to a TAM problem in some sense, that there are people who will pay for convenience, but they're not probably infinite, and that category of people might grow somewhat slowly over a period of time.
Yeah.
And that's why your playbook on the other loan products and other things which the people are anyways paying for in some fashion comes into play.
Yeah.
So obviously it's still a young, fairly young company in that sense. So a lot remains to be discovered.
Of course.
And so tell me something, which part of data kind of surprised you that, this is against what I would normally intuitively have thought of?
When we were figuring out the drop stages and we were preparing the plan, and this is pretty much in the initial phase, okay? So instead of the document uploading, which I told you is the major drop-off stage, I figured that the KYC bit will be the biggest drop-off stage, because in my head I thought, we would require a video KYC or whatever. People are not comfortable, they don't know how to do it. To my pleasant surprise, maybe everyone knew how to do that.
That's because the category is kind of gotten some degree of education? I mean, other people have made them
Yeah,
do this stuff already in some
not
sense.
just other people. So again, these are business owners,
Yeah.
but banks itself, like they have taught the users, and these guys, they are seasoned guys, right? They have applied loans before this also. They know that the process is evolving, and see, this is their need.
Sure.
So they have to educate themselves. But in my own way, I completely kept them inside one umbrella and thinking, oh, they are not digitally savvy. I was very, very wrong.
Oh, that way, thanks to the WhatsApp adoption, I think digital savviness of sharing pictures, content, videos, and everything is like taken a big leap, right? In that sense, and it's also somewhere the need is very clearly established. The user has a very strong motivation
Yeah.
to now complete
Yeah.
this. So whatever hiccups he might face, if he's very casual, that mila nahi mila farak nahi padta,
Yeah.
then he might slack off. But otherwise, he will complete whatever that means. Interesting, but that's not the same story when you have the loan part problem solved. The other stuff still needs a little bit of hard education / convincing / confidence building and
That
trust building.
is 10 times tougher, if not more than that.
Have you found, let's say, mechanisms around peer referencing / reviews /
Yeah.
testimonials to kind of make
Yeah.
that journey easier?
Yeah. So one thing that has really helped us, and we figured that out, and now that is one of our acquisition channels, and or rather helped us launch our referral program, is so the invoice management. Of course, you are raising your invoice to certain parties. That's the terminologies, right? So when you are sending it to those parties, the power users that we have, I think that was one of the validations that we got as a very, premature company or product rather, is that they liked the feature so much, they started referring to us to their parties.
Okay.
And of course, if they're saying that, try this because I'm going to send you the invoice over here, you have all the details because I've already mentioned the items, it's already there. You just need to cross-verify and pay me. Parties started using that. And for the longest of time, we were trying to think of launching a referral program where, what would make sense? And we would think like, why don't you refer another business owner who is looking for a loan or something like that. To an extent, we did see things coming in. This one, oh my God, like...
This smells like Hotmail to me, no? I mean, because every invoice that's going out to 25 parties, if it's, let's say, sent by CredAble and, click here to get your own CredAble.
No, it's not the send by CredAble part.
Huh.
It is the fact that, so in the invoice, these SMEs, so they have to deal with a lot of parties and they have to deal with a lot of inventory, stock items, right? And usually what happens is that in other competitors, you have a limit. Of course, that's their monetization game. But because...
number of SKUs that you can put in an invoice is finite, okay? But you have a larger
Again, that's
number.
also because that we are a brand new entry. But that's exactly what, made them ask other people that you also start using that. Free mein hai. And that also goes back to the point that, two things. One is that we Indians...
But this is quite a nuanced insight कि inventory ज़्यादा होती है और वो free में नहीं मिलती तो लोग switch कर जाएंगे इसके लिए, okay?
And that's why I'm saying the stickiness is the factor. Because
also the user insight from the conversation, because I don't know if you can ever discover this from data that the number of SKUs
that is definitely from... See, this we figured out because we spoke to the user.
Correct.
How will I know that they will...
Yeah, absolutely.
Exactly.
Because this kind of data will not surface from any dashboard that will come out of it. So what you're saying is this is now driving stickiness because this user has invited other parties onto the platform. And would this now start to seem like a bit of a case of network effects that if my partners, my suppliers, my vendors are all here, then I have lesser reason to go out of this ecosystem because, I mean, they're all here. I might as well just keep it simple. But what you're saying is the part around having a larger number of SKU items to be dealt with in the invoice and sending the invoice from here is making it easy. But wouldn't this also reflect on the other side where send with CredAble or whatever has happened will get this guy curious about what is this and how do I navigate this and all of that? Have you evaluated that as a possible channel? Am I missing something here?
No, you
because
are
to me
not
it smelled
missing
very
out.
close to the send with Hotmail kind of use case.
No. You are you are right. The thing is, we are not the only ones who realized it. Any competitor, they would have done it. But that's what I'm exactly trying to say is that these folks, they are pretty much focused on what they're getting out of anything. I'll give you one.
So which makes the incentivization / transactional appeal a lot more important compared to just discovery.
And also, I told you, right, we are not the only ones who are offering this.
In some sense, it's not a discovery problem. They already know that you exist. Is that a fair statement to make, at least in the ecosystem of the partners that these guys work with?
They might not know us from a financial operations point of view. They definitely know us from a lending perspective. What I was trying to say that a similar competitor, they also tried the same game, right? And of course, any invoice that would be sent by any company, obviously that powered by whatever, will always be there. When we initially started doing our market research, we obviously asked, what is the reason you are, using these folks? I thought that the ease of comfort, convenience and all. Turns out it was cashback for every
incentivized behavior. But that's a structural issue, because if you incentivize a behavior, it has to only go to the point where the behavior is sustained, even if the incentive is withdrawn.
So I cannot offer cashbacks for the rest of that user's life.
You would want to, because that would make it a...
So that's again my point, right? If I use that tactic, what's the point? The moment I will stop giving cashback, I will see that user dropping off. So what do? That's why that's why we hit the drawing board again, and we wanted to see what are the features that I can give them out for an infinite time, so that, like the SKUs.
Sure.
That is where we figured out a value.
Your incentives or your hooks are essentially non-monetary in nature, while the customer on the other side is very tempted and easy to sway with the monetary incentives. This is a harder thing to figure out in some sense, that okay, he'll leave that 100 rupee cashback to be able to do more SKUs in some sense, because that's what you're fighting against in the competitive ecosystem. So deeper consumer insight is what's going to help you win the war than just the larger wallet of giving away cashbacks.
Yeah.
Very interesting. So very interesting way of looking at building it slightly for the longer haul, not using these shortcuts or incentives. At a corporate structure and strategy level, is this a conscious thought taken that, okay, we have these growth hacks available, you could have also done cashbacks of whatever kind to drive some of these behaviors, but you're taking a conscious stance to go a little deeper on the inside side of things than do this?
No, how does that affect your
velocity?
No. It does affect my velocity. I wouldn't lie. But like you said, we are in this for the long haul.
Sure.
And whatever I am trying out for this particular product, you need to also understand that CredAble has been in the working capital game for the last 5 years, right?
Sure.
There also we have seen anything that is worth pursuing for the long haul, that sticks out.
So you're not in this mad rush of all of this action that's happening in the fintech space, where this user acquisition is the only KPI to chase and everyone can kind of hack it.
It is not the only KPI to chase. Of course, acquisition. Of course, acquisition is something that we
It's a valuable piece, but you can't look at only that.
No,
but that's
retention,
where the mad rush is.
Retention.
But that's where the mad rush is, right? I mean, all of the money that's flown into the fintech space, a big part of it got blown up in acquisition. And retention is still a subject which is uncommon. That's the reason we're having this conversation.
See, I'll tell you what. Somebody who has looked at all sides of it for how much ever exposure, out of all of this, I can honestly say the advertisers are the ones who gained the big bucks, right?
By all means.
Yeah, so like...
I mean, that's a clear story of, I remember the two cats fighting for that little piece of bread and the monkey benefiting out of it. Right? That's how I see that
it is.
Story.
And see, fair game, right?
I mean, it's a pattern for the market. It's an evolution journey in some sense for the ecosystem. And that's why what I'm excited about now is people like you are thinking about this from a well-rounded approach that, okay, a short-term hack is not going to solve the problem for me. I want to play for the long haul, which means my incentives can't be short-term cashbacks, which can't sustain or can't scale. And I have
certain things can definitely see. You also need to, give that push certain times.
So I'm not saying you blanket object to all of this. You have a sensible choice. So give me a sense of, wherever you used monetary incentives and that has worked well, and then you've been able to withdraw and the habit still maintained.
So this would be in open actually.
Sure.
So this is when we had launched the brand new credit card for founders or entrepreneurs. And initially what we were doing when we launched the card, whoever signs up instantly will get X amount of credit with that card,
Okay.
irrespective of their credit profile.
Sure.
And I wouldn't lie, we got a tremendous
Was the amount sizable?
I would think so. Like, you also need to understand the kind of people that we're
Sure.
signing up. Mostly very young generation entrepreneurs and freelancers and all that, right? So definitely,
That excited them, the amount.
any amount of credit would be great for them, right?
But it offset your customer acquisition cost because this then became credit and not really upfront discount or whatever, right?
But credit is credit.
Still risk. I mean, you'll have some sort of math around how much did you recover, how much of it became NPN. That became
That's the thing, right?
cost
Like,
in some
because
sense.
it is credit card, one of the most riskiest products that you can sell. That's the thing. While it's not instant cashback or instant, I'm giving out money.
It's also the risk which is also delayed. You don't know how it will play out.
Exactly. So it's even riskier, I would say that. And by the end of it, the exercise that we had conducted, it became we became increasingly sure that this is definitely not going to be sustainable.
Sure.
Even if for a short-term period, we definitely wouldn't want to do that. Fortunately, Open is, of course, being run by brilliant people.
Of
So
course.
they figured out a hack and we proceeded, accordingly.
In a different direction.
So
then.
that was, damage was
Contained.
yes.
But in general, we've seen different kinds of behaviors being, let's say, inspired / pushed for / incentivized by brand owners. And sometimes it's sustainable. It's okay if it's a one-time incentive, and second time you just like the behavior or the experience so much that you will continue without the incentive as well. But a large majority ends up being endless treadmill-ish kind of affair where you keep incentivizing users. And to me, quick commerce ends up being the most biggest culprit in that sense, because you're anyway offering me very serious convenience. You're also offering me deep discounts. So, I mean, it's not switching out. And tomorrow you have 5 competitors also doing the same thing. So it's never going to build a stickiness. And that's the part where I found your consumer insight wala aspect very interesting, because you figured a piece of nuance which others haven't. And I mean, they'll soon play catch up anyway. But do you have a series of such things that you keep figuring out and discovering and then solving for, which give you those non-monetary hooks which are exciting for your users?
So we try to, because there's, like I said, everybody will have figured out something sooner or later, and
or they'll follow suit. I mean, they'll just
they will
copy
follow
you.
suit, as simple as such. What we try to do as an exercise, as a team, we do this weekly exercise where all of us, irrespective of whichever team we are in, we try to contact a few users and we try to understand what they have done. And like I said, the question is not like, how would you want us to improve and all that. Let's
Sure.
not go into that.
Yeah.
Like, what have you done? What is the first thing you saw? Specific questions, of
Sure.
course. And what helps us is that once a week, we all gather, we bring down our notes. It's like this. Okay, what can be this? What can be that? And it's not that the fact that only the product person is giving me the insights, or from the marketing point of view, I'm offering my insights. It's at the end of the day, different people understanding different perspectives. So you will have those nuanced insights the moment you are part of a team and you are getting that discussion done.
So it's something which, as long as you prioritize, you will solve for.
See, for us, like you kind of mentioned it already, for us is to get those insights first. That is a priority for us. That's why we are doing it as a weekly exercise.
I mean, if you're able to build, let's say, a science around it, and it's predictable that you are able to do this repeatedly, that becomes your sustainable competitive advantage, right? In that sense.
Yeah. This is something like we do it like this way. Every brand, every successful company in the world will have their own.
They have to figure their own way out, because otherwise, if you don't have competitive advantages, it's not going to last. Awesome. This is extremely interesting, Nandini. Thank you so much for doing this. Here you have a filmmaker who's turned into a content person, and now she's a growth leader, doing fairly interesting stuff on both left and right side of the brains. She's using her roots in content to build empathy and understand the user insights and translate them into communication, which builds trust. Thank you so much, Nandini.
My
Been a
pleasure.
pleasure to do this.